So today I just wanted to talk to you guys a little bit about one of the best places to look for stocks to lay a solid foundation in your account. Hey, what's up? This is Courtney Golden with the Flex Financial Trading Group. Just checking in with you guys real quick. Hope everybody had a good week out there. Just want to do a quick video, hopefully a helpful video for some of you guys that are investing and trading in the market. Those of you guys that are familiar with our page, you know we always like to give you guys some helpful information, give you guys some tips on things that we're seeing in the market and how to trade and invest the right way. So before we jump into that though, those of you guys that are on YouTube, make sure you hit that like and subscribe button, share this out, comment below. All of that helps us out as we continue to grow our YouTube channel. So definitely appreciate that. Definitely appreciate you guys tuning in today. So obviously with being a stock coach and being an investing mentor, I get a lot of questions about particular stocks to invest in. And a lot of times, most of those questions come from people that don't have a lot of experience in the market and just looking to kind of get started out. So today, I just wanted to talk to you guys a little bit about one of the best places to look for stocks to lay a solid foundation in your account and give you some stability and growth over the long term in your account, as well as, most importantly, help you build up your passive income by collecting dividends. And the place that you're going to really want to look for these type of stocks is going to be in the Dow Jones Industrial Average. So that's a great place to start and lay that foundation. So the Dow Jones is a stock market index, or really just index is a fancy word for a group of stocks that measures the performance of 30 of some of the largest companies in the United States. And these companies are known as blue chip companies, which blue chip basically means that they're well-established, well-known companies, and they're strong financially, strong fundamentally, rock-solid companies. So it's cool to have those volatile companies in your portfolio if you're trading those companies and you know you have some solid strategies that you're using to get quick profits from very volatile stocks. Or if it's companies that you want to hold for the long term that have some really big potential that you think over the long term and they're kind of volatile or just new to the market and they're just not as stable as some of those blue chip stocks, it's okay to have that, but you really need to have stability in your account and have some balance. It's all about having balance in your account. And the stocks that are in the Dow Jones Industrial Average are going to give your account that stability. Also, one of the best things about the companies that are in the Dow is a lot of them pay out a dividend to people that are buying and holding their stock shares. So a dividend is basically when a company shares their earning profits with their shareholders and they pay out money to their shareholders just for owning their shares of a stock. So this is one of the key factors that make dividend paying stocks in the Dow more stable is the fact that they pay a dividend. The fact that they pay that dividend makes investors more willing to have a stronger hold on their shares, and they're going to hold those shares for longer periods of time versus stocks that don't pay a dividend. So when we see the market start to pull back, like we've seen over the last couple of weeks, or we even seen a little bit of pulling back today in some companies, those companies that are in the Dow, they typically don't see as deep as a sell-off compared to companies that are outside of the Dow and companies that don't pay dividends. So really the reason for that is institutions that really control the market. We're talking about the big money. We're talking about the college endowments, the hedge funds, the banks that really control the market. They love collecting dividends. So they love dividend paying stocks. So they buy millions and millions of shares at a time. And just for owning those millions and millions of shares, they're paid out a dividend for every single share that they have. So those dividends are usually going to be paid out on a quarterly basis. Sometimes they're paid out monthly depending on the company. So again, just for buying and holding shares of a stock that pays a dividend, you can start to create passive income for yourself on a monthly and quarterly basis. So I highly recommend those of you guys that are actively investing in the market, you got to start focusing on building up your companies that pay a dividend and start building up your dividend portfolio. The more shares of dividend paying stocks that you own, the bigger the dividend checks you're going to get in the mail when those companies pay out those dividends. And you can start finding those companies that pay out those dividends in the Dow Jones Industrial Average. So you want to start there. Again, these are the stable companies that pay out those dividends. The easiest place to find a list of Dow Jones Industrial Average companies is going to be Yahoo Finance. Or if you don't like using Yahoo Finance or not familiar with Yahoo Finance, you can just Google it and pull up the 30 companies in the Dow Jones. But I do suggest using Yahoo Finance for your stock market research. It has all the information that you really need to know about a company, about their fundamentals. You can also check out the stock charts on there. You can read upcoming news, things like that. And the best thing about Yahoo Finance is it's free. So you can't beat that. And then you can also see if a company pays out a dividend on Yahoo Finance as well. So going back to the Dow Jones Industrial Average, there are 30 companies in the index total, as I mentioned before. But really, just for today, I want to give you guys just a starting point with 3 companies that I personally like in the Dow Jones Industrial Average that I personally invested in my portfolio and that we recommend to our members. And these 3 companies are Apple, Visa, and Disney. So let's start with Apple. We all know Apple is a well-known company. You guys that are tuning in right now, watching this video, you're probably watching on your iPhone or whatever Apple device that you're using to watch this video. Apple is a member of the Dow Jones Industrial Average, and they do pay out a small dividend. But really with Apple, it's all about the potential growth of the company and the things that they're doing over the long term. So Apple devices, those iPhones, those iPads, those Mac laptops, those have always been a very strong part of how Apple makes their money and a part of their revenues. But now they're really developing their service offerings with their Apple One service, and that's really coming along very strong for them over these past few quarters. So recently they announced that they're entering into the electric vehicle space, and they're developing their own self-driving car as well. So a lot of big things happening with Apple. A great company to look into, a great stock that's in the Dow Jones Industrial Average. It does pay out a dividend. A great stock to consider to lay that foundation and hope for the long term. Another company again is Visa, also another well-known company. Visa is one of the most dominant payment processing companies in the world. Everybody, again, checking out this video right now, you probably got a Visa debit card in your wallet or a credit card in your purse, and you probably swipe that card on a regular basis. So I'm sure you're very familiar with Visa. So the thing about Visa is every time we go out, we swipe our cards, we're making our purchases, Visa gets a small percentage of every single transaction. Again, we got to realize that Visa is globally, so they're all over the world. So there's hundreds of millions of transactions that are happening with Visa cards on a daily basis. So Visa's making a ton of money on a daily basis as people are making those purchases and swiping those cards. One of the things about Visa, obviously during the pandemic, they saw their payment volume slow down some as we were all inside. We weren't out and about spending as much money as we normally would swiping those cards. But now that people are getting out and they're getting vaccinated, things are starting to open back up. That's really good news for Visa and getting their revenues back on track and the money that they make from people swiping those cards. So definitely recommend that you check out Visa. Again, Visa is a member of the Dow Jones Industrial Average, and it does pay out a dividend. And then the last stock in the Dow Jones Industrial Average I want to cover today is Disney. So Disney, it doesn't pay a dividend, but it is a member of the Dow Jones Industrial Average. And obviously, again, with the pandemic situation, Disney's theme parks had to close down. They saw a huge impact on the money that they normally bring in on that quarterly, yearly basis from the theme parks. But so that was a huge hit for the business. But the amazing thing about Disney is they're really able to make up for that big loss that they saw from not bringing in that theme park revenue. They were able to make up for that with the growth that they saw in their Disney Plus entertainment content streaming service. So Disney Plus just announced that they hit over 100 million subscribers in just 16 months. So that's an amazing accomplishment for Disney. And just to really put that into perspective for people, it took Netflix 9 years to reach over 95 million subscribers, and it only took Disney to less than a year and a half to reach 100 million subscribers. So that shows you the power in that Disney Plus service and what that company can do over the long term. So Disney Plus is going to be a huge driver for revenue, top line revenue for Disney over the next few years. And the reason for that is really every time that you see that $1, $2, $3 increase in the subscriber fee for Disney Plus, that's going to do nothing but add to that top line revenue as they gradually increase those fees, which they will do over time. And then let's not forget with Disney, with the theme parks opening back up soon, that's going to be money that's going to be start flowing back into Disney, adding to that normal revenue that they normally bring in on a quarterly annual basis as people start getting back outside, going to the parks and enjoying life. That's going to start driving revenue for Disney as well. And then let's tie this all back together. What are they going to use to pay for those Disney Plus subscription fees and those tickets to Disneyland? They're going to be swiping those Visa cards, paying for those fees, or even using Apple Pay to pay for those fees in ticket prices. And then what devices, when they go to Disneyland, are they going to be using to snap those pictures and record and post on social media? They're going to be using their Apple devices, their iPhones, and all that good stuff. So it all ties together with these three companies. So again, Apple, Visa, Disney, three great companies that are in the Dow Jones Industrial Average that you want to look into to give your account some stability, give your account some growth over the long term, and most importantly, start building up your passive income with collecting dividends. Again, that's what it's all about, creating financial freedom and not trading your time for dollars. You want to check these companies out on Yahoo Finance. That has all the information you need. Again, it is free. Along with some of the other companies in the Dow, you can research these companies on Yahoo Finance and start to figure out which companies that you like to invest in for the long term. Again, Apple, Visa, Disney are just three that I really like for the Dow, but you can do your own research and figure it out as well. If you need a little guidance in your investing, your trading, we have a great program for you. It's called Flex University. It's our online learning video library. We have a ton of information in there. We upload new content, new videos every single week to Flex University, and we can teach you exactly what you need to know to be a successful investor and trader in the stock market and start generating thousands of dollars per month for yourself and for your family, and most importantly, again, creating passive income and getting on the road to true financial freedom. Anybody can do it. I started where everybody's at, where all you new people out there, I had to start somewhere. Kev started somewhere as well. Anybody can do it. All you need is the information. You need the desire to learn, the willingness to take action. We give you the information. You'll be good to go from there. So check us out at flexfinancialtg.com. Again, the website is flexfinancialtg.com. You can get all the information there, and you can get signed up and get started in the Flex University program. So that's it for me. Again, thank you guys for tuning in today. Again, you guys out there on YouTube, hit that like button, hit that subscribe button, comment below. Let us know what stocks you're interested in. Let us know if you guys have any questions. Again, thank you guys for tuning in. We'll see you guys next time. You guys have a good one. Peace.